If you've been following current events at all, it's pretty clear global trade, technology, and geopolitics are undergoing a seismic shift. The era of global trade, as we've known it, is giving way to a more fractured, fiercely competitive world, one with the U.S. and China locked in the middle. My next guest has a new report coming out that explores this new era. It's called The New Global Order, Implications for Investors. Kevin Hebner is Global Investment Strategist at TD Epoch, and he joins us now. Kevin, always good to see you. I have to caveat to everybody, this is a really great report. I know you're going to be talking more about it in the future. This is a bit of an amuse-bouche, if you will, a little taste of some of your thought process as you're going through this. Maybe just tell us what the big picture. You know, we hear that we've entered a bipolar world, and as compared to what it was. How does the new global order differ from what we've had?
So the big catalyst for the new order is the rise of China, in China challenging the United States on all three dimensions of power. So economic strength, technological prowess, and defense capabilities. And so the report, we demonstrate how that has happened. And to a large extent, what Trump is doing now is a response to the rise of China, a new order, America's place in it, and the policies that the United States needs to put in place to have a more balanced outlook for trade and overall for the technology and defense capabilities of the country going forward.
I want to talk a bit about how those negotiations will go, and you touch on that in the paper. Before we get there, though, I think it's important to understand the status quo, which you also highlight. We've got a chart here that shows the one-way trade that the world has with China. Maybe just talk us through it, and why you think it's unsustainable.
So this chart shows that in terms of share of global manufacturing, China's gone from 8% to about 32% over the last 2 decades. So that's a pretty dramatic increase. And we can still, that there's still, it's propelling higher and continues to go higher. And that's a problem for 2 reasons. One reason is if the United States and other countries, if we deindustrialize and outsource production to China, it creates a lot of vulnerabilities in national security critical areas like semiconductors, healthcare, defense, different types of technology. So that's important. Also, because China's approach to trade is they believe in one-way trade. They want to export. They don't want to import very much. So then the United States has a current account deficit. It's $1 trillion. It's a huge amount of money. The country's deindustrialized. The labor share of output is at a record low. We have the employment in the manufacturing sectors declined a lot. So it creates a lot of problems. And with that, the rise of national populists in the United States.
I have to say, and just not to give things away, but I was just looking at some of the stats you have in your report, and I think you say 80% of the world's drones come from China, 70% of batteries, and China possesses 232 times the shipbuilding capacity of the United States. It's extraordinary.
Yes, it is. Yes. Yeah. And so people are, and there's a report from the Department of Defense in the United States, an executive order addressing this issue. And to some extent, ships are the new chips. So the lack of shipbuilding capability in the United States is a real problem. Luckily, we have 2 allies, Japan and Korea, who have capabilities in these areas. But right now, China is making 54% of global shipbuilding. The United States is 0.1%. And that's a real issue. If you do get into a conflict, if ships get sunk, the United States doesn't have the capacity to replace those.
Yeah, and again, not giving things away also, but you talk about the idea of fusion, where the Chinese government has development that is both military and civilian at the same time. And this sounds like an example of that, where they really are able to fuel innovation.
Yeah, so all advanced tech is dual nature, civil, military. So certainly drones would be that way. Autonomous vehicles would fit in that way. But I think every aspect of an advanced tech, any type of AI model, has both civilian commercial purposes and defense tech. And the Chinese government has, I think, been very clever positioning themselves for the industries of the future, massive subsidies where it makes sense, and in many ways are leading the new industries going forward.
Can you take us through your thought process on where this is headed? And we've got some charts that will show along the way. But in terms of what you think, the North Star is for the Trump administration in
Yes.
terms of what they're doing. And then I'd like to talk about you mentioned this, the signposts to know is it happening
Yes.
in the way they expect?
Yeah. So the first stage was the trade negotiations, and I think we're 95%, maybe 100% finished the first stage with tariff hikes. The second stage then is about negotiating trade deals. And DC has identified 15 countries that they're focused on. Currently, Vice President J.D. Vance, he's in India, negotiating for a trade deal there with the real focus on three areas: energy, technology, and defense. And I think that tells you a lot about their priorities, that those are the three issues that they're focused on. There is a big negotiation from Japan in DC last week. They're very experienced negotiators. They have a long history of trade deals with the United States. They did not get to the final line, but we're getting to the point, I think, pretty soon where we'll have, I think, the template for trade deals for a host of countries. Most are pretty straightforward. The EU is difficult. The trade deal with China is incredibly difficult. And Treasury Secretary Bessent, in a talk he gave today, was saying that he wants to get to the point where they can at least have a narrow deal with China. I think markets are a bit skeptical there, but that's something which the Treasury is moving forward on.
Yeah, we see, the markets are swinging day to day, like just on
Mhm.
parsing every
Yes.
word that comes out about something could be happening with China.
Yes.
I want to bring up a chart that you have here where it looks at the U.S. average effective tariff rates since 1890. Because
Yes.
the one thing, as these deals come to pass, and let's assume they get done, and we'll have to see if that happens,
Yeah.
are you still expecting, there will be tariffs, and they're going to be higher than they ever historically were?
Yes. So tariffs before, say, Liberation Day on April 2nd was 2 to 3% in terms of imports into the United States. Currently, they look like they're going to be some number like 23%. But I think we should have an expectation that once the trade negotiations are done, we have something like a 10% universal tariff on most countries, and then maybe China and some other countries will be treated differently. So it's going to be certainly the highest number since World War II, maybe the highest number since Smoot-Hawley, but dramatically different than we've had for decades.
I want to bring in a really good question that I work with some very smart people here, Kevin, my producer, put in, and I love this. It says that, historically, I think it's taken a long time to negotiate these deals.
Yeah.
And you highlighted 15
Yeah.
countries. If it takes, I
Yeah.
think, on average, 18 months to get a single deal,
Yeah.
in what world is it possible to get 15 trade deals in 3 to 6 months, which is what I understand they're targeting?
Yeah, so over the last 2 to 3 decades, on average, a bilateral trade deal with the United States has taken 18 months to negotiate and then even longer to actually implement. So the plan now is you're dealing with 15 countries and to get, at least get the contours of a deal and to get that done within the next 3 to 6 months. So that is very aggressive. And you have to wonder if we have the capacity to do that.
Kevin, I want to continue taking a look at the possible path that could happen, and maybe I'll say there's the U.S. administration's intent, and then we can talk about what the probability of that happening in that way happens. And we have to do it all in 6 minutes, as we often do. So
Yes.
let me ask you: once if let's say 15 trade deals get done, and that would be a huge feat. Then what do you think is happening? How successful do you think they're going to be at stimulating the economy and bringing industry, reshoring, bringing things back?
Yeah, so once we get some way through the trade deals, it's important to get a first one, get a template, apply that to the 13 countries that are relatively straightforward, and then deal with the difficult situation at the EU, the incredibly challenging negotiation with China. And then once that's done, then the administration can start looking at their pro-growth agenda. So tax cuts, which will be happening mid-year as part of the big, beautiful package, and anything in there that addresses corporate taxes, encouraging corporate investment, encouraging the consumer, I think markets will react very positively to. And then we move on to deregulation. So energy, finance, construction, making it easier to build. And also with that, the very pro-tech agenda that Trump campaigned on, and I think that's critically important as well. And the timing, the sequencing of policies has been very different this time than Trump season one. At that time, he started off with the pro-growth policies. Then in mid 2018, he had the tariffs. That's always challenging. And then November of 2018, the House elections, it was a disaster for the GOP. They lost 41 seats. So this time he's leading with the bad news, the tariffs, then transitioning to the more positive pro-growth agenda with the view on next November and making sure we don't have a repeat. They only have a very small majority in the House. If they want to control Congress, they need to keep it. And that's critical to him if he's going to get anything done at all in the last 2 years of his second term.
I want to bring up a quick chart you have in your piece where you show manufacturing employment as a percentage of I think, manufacturing employment of overall U.S. employment. Very low. And so what is realistic in terms of what the Trump administration wants to stimulate here?
And you can see that, manufacturing employment was about 17 million people until China joined the WTO, and then it plummeted to around 11 million. And then it's been at that level. Going forward, it's unlikely that number is going to go up very much. I think maybe we'll stop the decline in that number. But manufacturing today is a very different thing than it was. For example, in the 1980s, I worked on an assembly line making TVs. Most jobs now are highly skilled machinists, mechanical engineers, there's computer programmers. Things are very automated. But at minimum, it's very important that we don't deindustrialize, that we know how to make things, and that's important. And so currently, manufacturing is 8% of total employment. I don't think that number goes up, but it likely won't go down a whole lot either.
Let me ask you, there, as you talk about, there is a plan. You think that it's clear what the administration wants to do. What is your base case on what you think is actually going to happen? And let's throw the U.S. dollar into this because, of course, now there's questions. There's more people talking about whether it should be or will be the reserve currency, which was something we really didn't talk about, a couple of years ago.
Yeah. So in terms of Trump's policy priorities, we've talked about trade and tariffs, deregulation, tax cuts. The fourth one really is a dollar. And the view within the Trump administration is that the dollar is very overvalued relative to where it had been, say, in 1990. And then that's a key reason for the imbalances, the current account deficit, the decline in the manufacturing sector, the low labor share, the dissatisfaction with a lot of the working class in America. So they do want to address the issue of the dollar overvaluation. They think much of the overvaluation is driven by reserve money flowing into US dollar assets. So they want to discourage that so that the US dollar, it's still our reserve currency, but not the reserve currency. And this chart tries to illustrate those points. The administration is talking about these. The chair of the Council of Economic Advisors, Stephen Moran, is the one pushing this most heavily. But there are a number of, Trump has 6 trade advisors. A number of people do agree with this, but they're not yet in agreement on what policies they want to implement to weaken the dollar. And that is something that is very tricky.
I've got 15 seconds, Kevin, but I need to get this in. You talk about the dangers. Instead of America first, it could end up being America alone.
Yes. So if Trump keeps treating his allies badly, and then we get a situation in which we have sort of a chaotic breakdown in global trade, we end up with a rise of competing currency blocks, then we end up in a world that is very fragmented and very challenging, and probably there's another 10% down in U.S. equity markets. Our hope is that going forward, we avoid that situation, that Trump learns to deal with allies, we get trade deals, we move on to the pro-growth agenda, and that the bottom in equity markets isn't that very far from where we are today.